Today saw the release of JB Hi-Fi's first half year profit, and on the headline figures it actually looks quite good. If we have a look, NPAT was up 3% to $82.1 million. That's actually ahead of consensus, which was around 78. Beat it by about 5%. They affirmed their fully franked dividend of 50 cents. The other thing we noticed that was quite interesting on the JB Hi-Fi result, gross margins were up again. They were up about 28 basis points to 21.75. Very good there. It's 4% up on year. Outlook for 2013 was a little bit mixed. We saw that obviously their total guidance is supposed to be roughly around about $3.2 billion. That's slightly below Bloomberg consensus by about 0.08. However, it was up on the NPAT line for the whole year, looking at about $108 to $112 million, and the guidance was expected to come in around on the lower end of about $106 to $108. So all in all, a pretty good result when you look at the figures for JB Hi-Fi. Drilling down a little bit further, we did notice that their visual sector was actually still impaired. They did see a fairly large pullback in that kind of area. It's not something that we didn't already know. Last week we saw Sony flag to the market for the 7th straight time a loss, particularly in that sort of visual play. Their plasma and LCD screens are continuing to struggle along with their computer sales. Hardware for JB Hi-Fi was actually up, and it did actually help that 2.3% gain we saw in the sales division continue to go further. Other thing we saw in JB Hi-Fi, their sort of new direction with regards to online sales, JB Hi-Fi Now, which is very similar to Spotify, commercial and insurance sort of sectors really sort of continue to push JB Hi-Fi further forward. Very new areas continuing to really hit double-digit and high double-digit growth, and expect to see that going further forward. One thing we do know, Terry Smart did sort of come out and say today that FY12 saw some fairly aggressive discounting towards the end of the year. Did obviously see sales move further forward, but was obviously squeezing margins on the other side. They also expect it to be a continuing challenging year in 2013. Obviously we saw last week the consumer sentiment is still fairly low. Retail sales figures had a double drop, and that obviously is the first time that's happened since May, June back in 2011. Moving to the rest of the week, look, it's a very, very big week on the local market. The main news that we'll be watching quite heavily this week will be CBA, which comes out on Wednesday. Main headline figures there will be obviously their sales growth. We're expecting to come in around about 3.65 billion Australian dollars. All eyes will obviously therefore be on that dividend, which consensus says should be about $1.6, $1.7. That means that you're looking at about roughly a 5% fully franked dividend yield on that current extrapolation. We, however, expect to see them at about 6%, which means you should be looking at a final year div of roughly around about $2.2 to $2.35 million dollars on the share. So an inline result from CBA on Wednesday will probably actually see it hold its current gains. It's rallied 33.5% since June last year, and therefore you'll probably continue to see that income play in the bank space continue to sort of hold it further. Last thing to sort of talk about, on Thursday we will see Rio Tinto report to the market on their first half year profit. Again, right in the space there will be the iron ore, expecting that to really continue to drive Rio Tinto's share price further forward. It obviously has 70 to almost 75% of the share price comes from that sort of area. The one thing we already know, that $14 billion of impairments to the coal and also to the aluminium space has been well flagged to the market. We have a new CEO in Sam Walsh, and therefore an inline result with Rio Tinto may follow what happened with Newcrest last week, where they actually legged up even with an impaired result because it did come in line and above analyst predictions. So Thursday will be very interesting to see those cyclical stocks and whether or not Rio Tinto can leg higher.